All
Just let me
right.
know when. You're the bell.
We're getting some people like just coming in. So I guess we can kind of start. So Trading Basics 101. This is kind of for the entry level. So we're going to be doing more classes each week, I think. Chris and I are going to kind of, see how these go, see what works well, see who shows up. So if you want the basics classes to keep going, we actually need people to show up. So right now we have 32, which is not very many. I think it's just because it's the first. So hopefully next week it'll be better. Um, Professor Haven is here to teach us. We've got Dan Gananchel here, the man, the myth, the legend. Two big things. So I shared the YouTube link in the chat. Please go like and subscribe to our YouTube. It's free to do that, which is even better. The newsletter. If you haven't signed up for the newsletter, that's where all the hotness is. Getting great calls and stock plays sent to you every week. You'll see Dan chime in there quite a bit. And Ken puts a lot of effort into doing that. So there's the link for the newsletter subscription. And you can do $9.99 a month or $100 for a year. So it'll save you 2 months. So if you need anything, feel free to message me directly in chat or on Facebook during this or after anytime. But Professor Hayden, the floor is yours.
Oh, perfect. All right, so we had and my monitor just died. Hold on a second, guys. Okay, there we go. So we talked about yesterday more about options, which that's more advanced than what's happening today. But even if you know a lot about some of the basics, let me just fix that. Some of the basic stuff, then you may learn something else, because there's just with investments and with stock trading and the market, there's just no one's ever going to be a true expert on it, because there's just so much. But anyways, let's get started. This is Trading Basics 101, hosted by PersonaFi. So before we even get started, I know a lot of people have always been asking, like, how much do I need to start investing? And the answer is any amount. And as you can see, stocks only go up. The reason why it's any amount is because a lot of these brokers now are introducing fractional shares. So even if you want to get in on like Tesla, or if you want to get on Amazon, just things that you really, really like, and you can put in a fractional amount. You can just say, hey, I want to put in $100 in Amazon. But so we'll go into that further, but this is just kind of just so you guys know that, you don't have to have $10,000. You don't have to have 25. You don't have to have $1 million. It's any amount that you have to get started. And
Do brokerages have minimums?
Oh, I think there's a minimum for certain stocks, but I'm not sure. I don't trade fractional shares, so I probably have to look that up.
So some of them do, some of them do not. A lot of them might do $100 minimum, but I mean,
okay.
Usually to get benefits and get free stocks from like Webull, you have to do at least $100.
Okay.
But if you're looking at investing, usually like $100 is probably a good minimum, I would say.
Okay. All righty. So looking at the types of stocks and tickers, is we kind of want to focus on just maybe these three for right now. I mean, obviously there's just tons and tons of different financial products out there, but we're just talking about stocks and with the ticker symbols. And with that, we've got the main one, which you'll hear a lot of people say ETFs, which is an exchange traded funds. So what those kind of are is, let's just say you're really big into the tech sector, but you don't really know which company to go into. Well, you've got ETFs that it's kind of like a team of stocks that are pooled together, and they just give you a return based on what the percentages and whatnot. But I don't want to get into too much technical detail with that, but just kind of know that exchange traded funds, it's just kind of like a group of stocks. I don't know if you guys can hear my dog or not, but I'm sorry. He just likes to.
He's just letting loose,
Yeah, he just has to tell everyone back away from this house, man.
That's right.
So like an ETF stock, a good one would be QQQ. So that could be ETF that you can look at, or if you want to find something that's maybe with the S&P. I'm really bad with ampersands. Sorry, guys.
So Sergey asks, is there a minimum to begin trading ETFs?
It just depends on the cost of the ETF. So if there's some ETFs that are $10 or $5, in regards to the fractional shares, I'm not sure with ETFs on that. You'd have to look into that. But that's a good question. I'll look into that when we dive a little bit further.
I know there is some that do require a minimum.
Yeah, because some if they're like mutual funds, they usually require like a $2,500 down. But buying like an ETF is just as buying it's just like buying a stock, but
Yeah.
there are like small maintenance fees. I think there was one Vanguard one, and it was like 0.1% for the year. So there's a whole bunch of different things, but just basically ETFs, it's just a group of stocks. So if you were into tech, a good one you would look at would be QQQ, which follows the Nasdaq. The S&P 500, you'd hear SPY. There's basically an ETF for a lot of things like oil, precious metals, things like that. But I won't get into the specific stuff. I just want you to get an idea when you hear that. If you put in certain ticker symbols, you'll see something like, for example, NEO. If you look at the actual stock, when it says the corporation, will say NEO Incorporated, blah 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 blah. Sometimes you'll see ADR, and you're thinking, what is that? That's what's called an American Deposit Receipt. So NEO, I mean, they have a lot of stuff here in the States, or they're talking about stuff, but its main headquarters is in China. So just something to pay attention to if you just see what ADRs are. It's still a stock, but it's a stock that is stock. It's traded on the exchange. I'm really bad. I'll type it. Sorry, guys. So it's a stock that's traded on the exchange, but I'm trying to make it layman's terms so you guys know exactly. Oops, forgot about that. But process slightly different, and we'll touch base on that. But I just want you to get a brief idea. We have dividend stocks. So a lot of you probably know what dividends are, but I just want to talk about it. So dividends, if a stock pays a dividend, you either will get the cash of the dividend amount, or you can reinvest in it into the stock, and they'll you'll purchase those shares, and dividends are actually determined by the board of directors. So just because a stock does have a dividend last quarter, that does not mean it's going to happen next quarter. Most of the time it does, but just like a good example was with GE, they cut their dividends to 1 cent when before. So just stuff to kind of pay attention to. And then I put company stocks, just so you know, it's just like Tesla, that's a company. Amazon, just stuff like that. Not really a specific thing. I just wanted you guys to just kind of know the different, just the different basic stuff. Because within ETFs, there's a whole subcategory. Within ADRs, there's another subcategory. Within dividend stocks, it's like, do you want a protective one, a cyclical one? There's just a lot of different stuff. But I'm not going to go over that because obviously Connor's going to want to stop me from going on a tangent. So, excuse me. All right. So. And I pulled this from Charles Schwab. Every broker's different. I'll show you Webull, I'll show you TD Ameritrade, but I just want to give you an idea of just some basic definitions. So the first definition is going to be your bid. And I talked about this yesterday on how options were working, but a bid is just the asking price to buy the stock. And then the ask, and I'll go over an example of this in a second. And then you have the ask, which is the asking price to sell the stock. Okay, so a good example, and I know everyone loves my drawings, but we'll go back to the car dealership. So we've got a guy, and we've got the car dealership guy, and we've got this car, and he's asking the car, he's asking to sell this for $100. But this guy's like, no, I don't want it for that. I want it for $98. So the example with this would be is he's bidding $98, but he's asking $100. So he's asking 98, he's not budging at 100. So you could say the spread, so the spread is just the difference between them. So people, they'll say, well, the spread is this, the spread is that. A spread is important because that can help you determine if the spread's moving maybe like $1 away from each other or $10 away. That could have a liquidity issue, meaning that, you know, a lot of people are holding, they don't want to buy or they don't want to sell it at a certain price. The bid's too low. There's just a whole whole plethora of different things that can happen. So a spread is just the difference between the bid and ask. Now this spread says -2. I mean, brokers are different. I mean, it's just saying that it's 2 cents away from the bid. It just depends. So the next thing also is I want to talk about is volume. So volume is the amount. Volume is the amount of trades that occurred per time frame. All right. So what constitutes as volume? So so with this, let's say this guy now changes his bid price to 99. So this would actually change on your ticker board or on your broker program. Then finally, this guy, he's like, okay, yeah, I'll sell it for $99.50. And so then the ask would then change to that. But then after that, he finally says, okay, I'll do $99.50. So they made a deal. It hits the same price. Therefore, it's considered a sale. So anytime you a share or an option or anything, when a transaction occurs, that's considered one volume. So when one person buys or one person sells, then one person buys, then it goes to that person. Then when that person wants to then sell, just that the first two things that occurred, that would be considered one volume. So now this car goes to, oops, let's get rid of this guy. Where is the erase? Come on. So now this guy gets the car. And he loves it. So now he's driven the car for a while. You know, he's like, okay, this is cool. But he now wants to sell it. So this car is worth more in value. So he would say, for example, hey, I want to sell this for $101.
So a real quick question. So somebody had in chat, Daniel Stubbs asked, when purchasing stocks, do you usually do limit order with a set price or market?
I'm going to talk about that literally the next slide. I just wanted people to understand what the volume is.
Cool.
So if you were to sell this for $101, now he's asking for it because he's selling it. And another person, they just pick it up for the same price. So now the volume would be 2. So again, it goes to the definition is just when something is sold then bought, that's considered one volume, and then it just keeps on repeating. Okay. The last thing I want to talk about with this slide is just the size. You may see this on Webull. This on Schwab, it shows it like this. Let me pull up Webull. On Webull, it looks like it doesn't have it. Okay. Webull doesn't have it. I guess if you go to active trade, it'll show that. But just so you know, when you see size, it just means the 1300, that's going to go to your bid. The 100 is going to go to your ask. So again, this just means currently right now, someone's bidding 28 83 for this is AT&T. The size is just how many they're offering to buy, and this is how much the opposing person's offering to sell. So just I'm going in real basics. So if you guys knew this already, you know, that's fine. But I just want to make sure we all are on the same page before we go forward. So how do I place an order? So there are different, there's a whole bunch of different brokers. So I'm trying to touch on different brokers to see the different ways. But there are a couple of things you need to know. The first one is, what is a market order? So a market order will fill or will execute, meaning buy or sell, at the bid or ask price. So if you see right here, I looked at Apple after hours today. There was a current bid for $137.19. The ask is $137.20. So if I clicked buy and clicked market, that's kind of telling everyone else, like, hold up, I want to buy this first. So what happens is when you click market, it will fill at the ask price. So basically you're kind of shooting on out there saying, hey, I want this. I want it now. You know, I'm not going to wait, but I want it now. So if you do a market order buy, it will fill at the ask price. So if you did that, you would buy it for $137.20, not the $137.19. It's kind of reverse when you do market orders. So if you do a market order, because I was saying, you know, the ask is what people are selling it for, the bid's what you buy it for. Just make sure when you do a market order, it's going to fill at the highest price, not the lowest. And if you click sell on the market order, it's going to fill at the lowest price of that's available. Okay. So I just want people to understand that, because when people were on Robinhood, they generally sent in market orders, not limit orders, and then they're wondering why they're down the second they buy it, because it didn't fill at the bid price; it filled at the ask price. Let me see what Ryan says. So if I give my car to someone else, that's one volume because it was an exchange of one item. Yes. Yeah. So Ryan asked. If you were to sell his car to someone else and they bought it, that's considered one volume. Okay. With that being said, is it better to buy a stock where there is more volume, cars being traded? That can be a trading strategy, because if there's more volume, that means more people are going in on the action. So when you start looking at the volume of stocks traded per day, if you look in intraday, which would mean just the time frame of when the stock's traded, you'll see roughly at 9:30 a.m. to 4 p or 9:30 a.m. to 4 p.m. Eastern time, those 2 hours are going to be the largest volume. So if there's more volume, there's more people trading it, which means there's more volatility, though. So when you're dealing with that, it's just kind of, those are some trading strategies that you can look at. If there's low volume, that just means that maybe the stock's not as popular, maybe people are holding it, you know, things like that. There's no way to really figure out, you know, what's going on until you do some deeper digging on that particular stock. So volatility means stock can go up or down. Yes, exactly. Okay. So the next one would be a limit order. So a limit order is to buy. Hey, I'm going to get this dog out.
Doggy problems. Here we go.
Yeah. I guess the one thing with virtual teaching is you got your little fur babies with you.
Just wait until it turns into real babies, dude.
No, we're not going to talk about that. So a limit order is basically you set a price to buy or sell a stock at a you set a price to buy or sell a stock. Yeah. Okay. So an example would be, and I'll throw up a real example. So if I were on Webull and I'm looking at Apple right now and I'm thinking, hey, Apple, it's at 137.39. I'm not sure if I want to buy it for that, but you know what? I'll I'll set an order for, where is the thing? I can click limit, quantity 1, but I'm going to buy, you know what? I'm just going to wait. I think Apple will go down, so I'm just going to set it for 100. And then a lot of brokers will ask what time in force is. If it's the day, it will stop at 4 p.m. Eastern time. But GTC, that means good till canceled. So let me actually write that, what that means. GTC, good till canceled, which means that order is set for, it's depending on the broker, I think it's 60 days. Like the norm is 60 days. So if I choose GTC, good till cancel, so I'm going to set my limit and I'm going to place my order. Excuse me. Buy. I'm still learning Weeble, guys, so just give me.
Why aren't you buying Palantir?
Oh, sorry. Okay, Palantir.
Come on, risky with it.
Yeah, come on. What's
I'm
up,
such a boomer. Jeez.
dude? Yeah, this isn't Wall Street Bets, okay?
Yeah. Oh, it is. Oh, okay. So, you know, let's say I think Palantir is going to go down to like 31. So I'll set my limit price for 31. So when the stock moves around during the day, if it hits 31, then it will fill. It's the same with selling. If you let's say you bought Apple at 137.19, you click a limit. So a limit.
So we had a couple questions.
Oh,
so
yeah.
Can I set my limit higher or as low as I want?
Well, that's a good question because you used to, and now brokers are canceling the orders because they're going too far out. I think within reason of what would be considered their range that they've approached, but in instance like with GameStop, people were setting these sell orders for like 1,000 and higher, things like that. But it really depends on the broker with that. But I mean, you can set limits to sell. If you own something like the stock and you set a sell limit, you should be able to have it to as high or low as you want to sell. But I mean, it just depends on the broker and their policies. So really with that, that you just have to find out from your broker. Daniel asks, what's the risk to buying after hours? I read it can be more risky. So just kind of going a little off topic, but to answer it because we're talking about buying and selling. If you do after hours would be between 4 p.m. to 9 p.m. Eastern time, and then 4 p.m. to 8 p.m. Eastern time, then 4 a.m. to 9:30 a.m. Eastern time. The reason why it can be more risky is because market makers generally are not trading on those times, because the reason why market makers exist is to create to have a fluid market, meaning if there's no one else that's there to pick up to buy or to sell, they're there to fill in and they're there to help. Well, it's questionable, but so mainly the after hours trading will be a lot of other organizations, some hedge funds, institutions, things like that. So it can become more risky because the spread's larger. So even a perfect example is I was looking at Piton right now. So I know it's a little hard to see, but see where the B, that means bid. This is at 144.59. The ask is at 144.90. I'll make this larger. So here's kind of going back to what I was going for. If the bid's 144.59 and the ask is 144.90, and I set a market order, but market's closed right now. But if I set a market order, what would it fill at? Because I wanted to buy Piton, so it would fill at 144.90 if I bought one. If I wanted to sell it, it would hit at 144.59 if I did a market order. So if you place limit orders in between that, you would be placing it in between the spread, and it may fill, it may not. It just depends on how the computers or other people view that. So hopefully that answers your question. Going back. So now this is if you were to buy something. Let's talk about kind of some things that you can do to protect yourself. So after you've bought the stock, there are some other stuff that you can set to either to take in profits or to protect your losses. So people will set what's called a stop order. So a stop order, and then also for Ryan's question, yes, that's correct. Is the spread the distance between the buyer's bid and the seller's ask? Yes, that is correct. Just like the range for you math nerds. So a stop order is you set the amount, I guess the amount of money you are willing to lose. And I'm not doing formal definitions. I'm just making it so you guys can understand. So let's just go back again to what we have up here. I bought Apple for $137.20. And so I bought Apple. So I'm gonna write that. Oops. So I bought Apple. So I'm gonna write AAPL for $137.20. Okay. But I want to make sure it's like, okay, I don't have time to follow Apple. I mean, I've got 2 kids, I got to work, I like to watch my Netflix, I like to do a lot of stuff. I don't really want to follow Apple all the time because, maybe something bad happened with their new iPhone, like it exploded, like Samsung's phones. I don't want anything that can occur, and I want to protect my losses because once you own this stock and if it drops, then and you're not aware of it, then you may lose more money than what you wanted to. Now, I know this sounds kind of negative, but you also, not every trade, everyone will make bad trades no matter what. No one's perfect. So what people can do is so once they buy it, they can now click the sell button and that's going to, and so you click sell, but you click your stop. So you're saying, okay, what's a reasonable amount of loss I can take for Apple? So I'm thinking, I don't want to lose more than maybe $20 because I could maybe sell Apple for either more or a little bit less, and I could go into some other stocks and I can make more money, which is what we all want to do. So once you click the sell and you hit stop, you can just set your order for so I said $20. So what that means is if this stock hits 117.20, then your broker will auto execute at market and sell it for 117.20. Now there are some warnings with this though, because sometimes the market can adjust overnight. Apple can shoot up really high. Apple can shoot down really low. We don't know. So when market opens and this is below the 117.20, it will fill at market. So that's the one little cautionary thing that when I tell people, if you set the stop order and you hold it overnight, so if you click the good till cancel button for that, then this will execute. It will hit market. So if Apple was trading so you bought it for here, you set your stop for here, but then Apple opens at, let's just say 113 at open, it's going to sell it for 113. So that's the one little caveat with stop orders. But those can be helpful though, because if Apple, like just going back to the example of the apples are exploding while charging or something like that, and Apple shoots down to 50, I mean, do you want to take more of that loss? That's up to you. You can average, you can do what's called average down. You can do other things, but if you just want to make sure, then you can set the stop. So you just have to be careful on that respect. I saw a question. Justin asked, are you able to set a trailing stop loss? Yes, some brokers do, and I was going to show you how to set that up. And then Ryan asked, it's not good to use a sell limits on penny stocks because they're volatile. They move up and down fast. Do you think that it's a good strategy? Everyone's strategy is different. Like for me, my day trading rule is if I'm down 20% on an option play or on a stock investment, then I cut my losses and I move on to something else. But if you're doing long-term investments, maybe you have to look at, okay, well, how far down do I want it to go? It's based on what your risk management, how much you're willing to lose. Are you willing to just buy more to then average your cost down? There's just so many different things. But with penny stocks, because of the volatility, you may not want to do 20%, because some stocks, if they're trading at like 5 cents and they go up and down between 10 cents and 2 cents, then it's harder to figure out what you want to do. So I really can't give a definitive answer, but for me, my trading rules are it's 20% for the day. But yeah, hopefully that answers. Can you set? Oh, that's a good question, because Jovian asks, can you set both at the same time? Yes, you can. You have a stop limit, which is the next one. So for more advanced people, these are considered, a stop limit is considered a bracket order. It's just all done in one little nice nifty thing. So basically a stop limit order, it's combination of both limit and stop order. And I'm just making it real simple. And then going back to Ryan's question, risk management up to me. Yep. Yes. What you're willing to lose. So if I were to click a stop limit, so let me actually show you the example on Webull. So I'm going back to, we're going with Palantir. So I want to set a stop limit. So here, so first you buy it, and let's say I bought it at what the bid is at 31.50. Can you guys see that okay? I'm not sure, because I can see mine.
Yep. I mean,
okay.
It's good. Yeah.
Okay, cool. So I buy it. Okay, it's bought. And also what's neat is on Webull, this shows you the spread right here. See the bids right here and the asks right there. So that's kind of neat. So if I click the sell, so this is after I buy it. So your stop limit, it's just a combination. So your stop price, all right, Palantir, man, I'm looking, and I'll go into chart basics in a little bit, but I'm saying, okay, I'm willing to cut my losses after $26, but Palantir to the moon, 45 in the next day. So I'll set my limit for 45. So what will happen is that they'll now be sent in order, saying your stop will be, hey, if Palantir gets to 26, get rid of it. But if it hits 45, you're good, and you get it. Okay, and you just click place order. Now you may see this. There is a large gap between limit price and last price. Are you sure you want to continue? That's up to you. I mean, I just say good. Oh, why did I do that? Did I mess up? Or did I flip it around? Dan, I need help.
Trying to buy. So isn't once it hits the stop price, it triggers, and then your limit price is the absolute bottom that it will.
Oh, so I got it mixed up then. Okay, sorry guys. So it's just basically everything I just said, but just reversed. Okay. Sorry about that. Yeah, well, that's fine. I don't usually do these orders, so that, I was just trying to get it right away. What's this? This arrow. Okay.
I drew that. I drew that.
Oh, okay.
That's the overall trend line.
Oh, okay. I was like, what is happening to my computer?
I'm glad that you.
Okay.
I had to. It was like I was just staring at, like, I saw it in my head. I was like, I see a trend line.
That's Ryan for you, everyone. Okay.
Okay, so I'll just delete this. Just you know what? Just forget that I said that. Everyone makes mistakes. The last one, some brokers have this. It's a trailing stop, which I really, really like these because this would be considered my strategy. Now, again, this is not financial advice. This is for entertainment purposes, but a trailing stop follows the stop order, then moves based on what you put in for loss or profit. So, and I have a good example of how this works. So it's on the next slide. So, seriously, my little doggy. hold on. So basically, how these work, how a trailing stop works is it's very similar to a stop order, but it will follow. And I don't know how to remove that.
Yo, my bad. Hold on. Let me try.
Oh, wait. Got it. Okay. So I'm going back to Apple again. This is Apple. This is what's called a DOM. And no, it's not 50 Shades of Gray. This is what's called a depth of market. A DOM, depth of market, or they can call it like a ladder. There's different names for it. So let's just go back to the same example. Is I bought Apple. I'm bad at spelling. At 137.20. Trailing stop at, and so when you input these, this is where it can get a little complicated. So this is going to be probably the more complex thing for when you're setting these. Is the trailing stop is either at a price or a percent. So when you see your brokers, and I'll go to Schwab for this one so you can see. It says trailing amount right here, and it says PTS, that's points. So a point would be $1. Okay, so if I were to say, okay, I want a trailing stop and I want it to do $1, that mean or 1 point, that means $1. So if you're doing a penny stock, you want to do decimals. So if the penny stock, if you want to set a stop loss of 5 cents, you'd have to put 0.5, or you can do percentage and then just put the percentage value in. So all that stuff you guys can play with. I just want you to understand how this works.
What was the depth of market again?
The DOM.
Yeah. What did that mean again?
DOM is depth of market or ladder. So this basically, depending on the broker, they're called different things. Because sometimes people will say the depth of market may be a level 2, but because what will happen is you'll see volume on these. A good example, let me show you on this real quick. So if I click on active trader, this is a DOM, a depth of market. So see how it shows the volume over here.
Oh.
This is futures. So this is going active right now. So right now I know at 35 or 13,547, 16 people have set their sell. So now you can see how this is moving. So this is active right now. So you can see people are trying to buy it at these levels. NASDAQ, this is NQ, which is NASDAQ futures. This moves very, very fast. It's 6:42 p.m. and this will jump. So
That's crazy.
So right here, so see how it's just jumped. Each point, so this would be each $1, is considered $20. So if I bought right here and I just hit my sell right there, up, but look, now I'm down 40, now I'm down nothing, it moves quickly.
This has nothing to do with
Yeah, I know. Yeah, but I'm just showing you can see the volume. So sorry. But so going back to trailing stop, let's just say I want to trail this at 2 cents. So let me make that smaller. Come on. So set trailing stop to 0.2 points for Apple. So what happens is if you set your trailing stop, it's going to execute at what this is at, or you can set a limit for it. That just depends on your broker. I use Schwab for that sometimes. I also have interactive brokers for that. So, but just for this example, let's show what that technically means. So what happens when you do a trailing stop is there is now a sell order right here, because this is 2 points, 2 cents. So that means if Apple falls down to 137.18, this will sell. But Apple did not sell. No, Apple did not drop. Apple has discovered a new technology to literally think and Apple will, or not to literally think, but you think of a text message and Apple, iPhone, iOS will then determine what you're thinking, and then it will it's going to go up. So, or text. So obviously with that news, you think the stock's going to rise. So what happens is, let me just draw a little box. So now, let me use a different color. That's a bad color. I'll do green because green's good. Oh, whoa. Sorry, guys. I had it all set up. It's just not working. So now, let's say it hits 137.21. Nothing happens yet. Then I'll explain why. Now it hits 137.22. Once it hits this, because since I set my points for 2 cents, this sell order now gets bumped up. That's how a trailing stop works. These are really nice because the difference between a limit order is that's kind of like you're capping how much you want to make. But if you're thinking, hey, I don't want to just make 5 cents. I want to make more. Like I want to ride this thing for as high as it can get. And then once it starts dropping below where I'm acceptable for a loss, I'd rather take the highest amount of profit. So that's the mentality of the trailing stops. Now, you can adjust these all you want, but you can just set it to however you want to. So I just did 2 just so you can see on this DOM. So now now it just keeps going up. Let's just say it hits up to 28. So now this order goes up 2, 4, 6. Okay. Now this hit that and everyone's like, yeah, this is too much. And it starts to go down. Once it hits that sell point to where the limit's being trailed, it will then auto execute and then it will sell. So you would hit, depending on how fast it's moving, you may hit 137.27 or 137.26. There's a thing called slippage. I won't go into that because, yeah, I just won't go into that. Otherwise, Connor will yell at me. So that's how a trailing stop works. So trailing stops are really, really a really good tool for your toolbox when you're going into these. Does Robinhood have it? I don't think so. I know Webull has it. Schwab has it. I know TD Ameritrade has it. Dan, do you know? Does your brokerage accounts have those, or Connor?
I know Schwab does.
Yeah, Schwab does. Does Fidelity, Vanguard, do those guys have it?
I'm guessing so.
Fidelity does. I don't know about Vanguard, but
Okay, E-Trade has it. So a lot of the big brokers, the big guys, they have this. Interactive Brokers has it. So this is a personal preference. I really love trailing stops if you're day trading, because if you get in at a right point and then you just let it just keep going up, or if you want it to go down, just keep going down, and then it will execute. I can talk about more advanced strategies on how to use these trailing stops, because you can actually set it to buy a stock or short a stock on given parameters, but that's a more advanced course. So we'll go with that. So that's kind of just the basics. I'm not done, but I'm just saying in terms of just the basics of setting the order, placing the order, then selling it, that's kind of the basics on doing all that. Okay. So are there any questions with that?
Is there a time of day that's best to buy?
Well, okay. So market open, the first 20 minutes is generally when it's most volatile. So if you get into an order in the first 20 minutes, you could just be really, really lucky. And if it's like there's a major sell-off in the beginning, then it starts to rally, or vice versa. I would say be careful within the first hour, because that's where the most volatility will happen. But then again, it's like 2021, anything can happen now. Like there could be a tweet, there could be news, and then everyone just, it's like, Wall Street Bets says, hey, I'm kidding on that part. But so I try to avoid, unless I'm going in for a real quick trade, I would try to avoid the first hour. If you want to go super long term, and you're okay with the price at what it's at, and you're really bullish or bearish on something, then you can. I would just be very, very careful on that. And then there's what's called the power hour. That's the last hour of the trading day. So that'd be 3 to 4 Eastern. Just, and this is kind of going off on a little tangent, but just so you guys know. So if people are day trading and it's a Friday, between 3 and 4 p.m., a lot of people are going to want to close out and be done for the weekend because depending on events that could occur over the weekend, that can drive the stock market either going super high up, super high down. No one knows. No one has a crystal ball. So a lot of day traders and a lot of people, they generally do close out on that. So that can be more volatile as well. So just keep note on Mondays and Fridays on that. If there's any other questions?
No questions
Nope.
that I see.
Okay, let's go into chart basics. So you learned how to buy and sell stocks, but now you're like, well, when do I need to buy? I have no idea. So this I just pulled from this is Apple again, and this is using the Webull. I know the
Do you eat a lot of apples every day, or just
yes.
you're so concerned with Apple?
Yeah, apparently so. I love apples. I just pulled it all at the same time. But do you want me to? But so
I'm just kidding.
no, I know. So let me actually pull up the Webull itself so you can see. So we're going to go back to Palantir. All right. Now this is a daily. Okay. Well, what does that even mean, daily? So when you look at charts, you're given what's called intervals, and with these intervals, you have to then identify and locate the data, and then understand it. So the things you want to look at is interval. Oops. Interval just means each bar is how much is what that data represents. I mean, and so since we all have some common sense, D would mean day. H would mean hour, W week, month, quarterly, yearly. M means minute, or lowercase m, sorry. So if I click the daily, this is showing the data of Palantir per day. And you can see down here, this has all the dates. Okay. And then the range is, well, how far back do you want to look at it? So if I were to click this stuff, so I want to know 1 month of data, and I want to see the data per day. So each candle, I don't know why it's doing that. Why did it not? Oh, because it shot to 1 hour. Okay, that's why. So I'm doing a day, so this is each day. So this is today. This was yesterday, day before, and that. So if you count all this, this will show you roughly, the month of data. Okay. Now you're seeing these things called candlesticks, and I'll type that. Candlesticks. So candlesticks show the data of the stock of the high, low, open, and close. So I'm just going to focus on just a couple, so we don't lose people. So I'm just going to focus on this one right here. So a candlestick has four parts to it. It has the high, the low, the open, and the close. So what each one means is this. So this guy right here is the high. So that's the highest point. So the very tip of this is what's called a wick, because candles have wicks. Now, yeah, candle has wicks on both sides in this instance. But so the very tip right here, that's the high. And then this little part right here, that's the low. So I can see what the range is for the day. And then we have this part right here. This part is what it opened at. This is where it closed at. So can wicks, can that make, can that help you determine, the volatility? It can, because if you look at this day, so this was on the 27th, so this was that Thursday, or is that Wednesday? This right here, this day was when Wall Street Bets was going out, on all these different stocks. So if you can see, this is where it was super volatile. And now people may be asking, hey, what are these bars underneath here? This is volume. I'm not going to talk about that just yet, because on Webull, I still need to figure out how to show stuff in that regard. But as you can see, this day was huge. Now, also, you're probably thinking, what is the difference between red and green? It's a red. If it's red, it means it went from high to low. If it's green, it went from low to high. Green is good, red is bad in the stock market. So if I'm looking at this wick right here, or this candle right here, this is the high. Oops. This is this is the low. This is where it opened at. So it's just inverted from the red one that I picked out. And this is where it closed at. Now, all the stuff in between, it's to show traders how high or low things can be. Can you use that to a trade advantage? There are some tactics you can use to that, but we'll get into that on another Zoom call on how you. Oh, go ahead.
Christian just asked, any good mobile apps to look at these charts throughout the day? I mean, he's looking at Webull right now, so I don't know what brokerage you use. Usually they have pretty good charting. What's the other ones that are good? Like TradingView, is that?
I know Tastyworks. There's TradingView is really good. You could even just look up. You can even go on like Google and type in like GME stock, and I think it'll show you just a line though. But you could switch to bars. In terms of recommendation, I don't have the answer for that because I use a computer for trading. If I were to use mobile, I already know what position I'm going into, so I already have an idea. I'm not a big mobile guy, so I don't know the answer to that. Maybe Connor, Ryan, and some other guys would know a little bit better on that.
Ryan's a good one to ask that
Brian.
question.
So, just going with this, seeing this, because I'm going to go into some other examples using this so you can see the difference between some stuff. Are there any questions on just knowing what the interval means? So again, interval is just going to mean the amount of data given. So this is time-based. So interval. And then the range, how many days or months, or just how much data do you want to see? Oops. So any questions on that? Because I'm going to quiz you guys. Okay, so I'm going to get rid of this stuff. I'm now going to change. So I'm going to change my interval to 15M. So the lowercase m again means minutes. And I'm going to set my range to 1 day. And I'm just going to zoom in a little bit because I don't want to get you guys confused. So I'll keep these up. So if my interval, oh, it changed it. Okay, so this is one thing I guess I'm not used to with Webull. Okay, so I set it to 15 minutes, and it's going to be 1 day. So if I were to count 1, 2, 3, 4 candlesticks, how much data am I looking at in terms of time? Okay. So I know it's 15. So each candlestick is 15. 1, 2, 3, 4. So 4 times 15 is going to be 1 hour. So if I go 4 more, 2 hours, 4 more, 3 hours, 4 more. 4 hours. If I clicked 5M, 5 minutes, that means now the data has changed to 5 minutes. But all the properties still apply. The wicks, so this would be the high. There's no wick on this one, so what you could technically say is for Palantir at 12:05, and I think this is Eastern, that it started at whatever it's down here. So this says 31.78. So it rallied for 5 minutes, and then it finally hit 31.92, but people started to sell, but then it eventually closed at 31.82. So this whole time. Okay. Now, I do know that there are some, in terms of the graph reporting, you would think that if this closed here, you would think it would be matching. This just may be a Webull thing, because with TD Ameritrade, let me just show you on this. Oh, there was a giant rally. Something happened. So let me just get rid of this. So if I were to look at, let's just go with IGC. Why is it not? Oh, okay. So this is a different interface, but you have to look. Okay, 30M, what does that mean? 30 minutes. So the last part of data, in terms of the reporting, it does it pretty closely. It's just sometimes trades will occur. You can see this one's pretty on point, so is that one. But then when you get to after hours, so that's what this shaded stuff means, there will be a larger spread. So when you look at these charts of data, I would say to just focus on the day, because that will show you more of the accurate data. And this is IGC. This is one of the penny stocks that Ryan picked out with Rise I.
So Chris,
Yeah.
every rectangle or candle that we see, that represents 30 minutes.
Yep. Yeah, because I have it set for 30 minutes. If I change it to 5M, it's now 5 minutes of data. So you can see what occurred. So a good analogy in terms of looking at these candlesticks and the time frame is the closer you look in. So if I click 1 day, 1 minute, that's what this means. 1D, 1M. So with Thinkorswim, it's a little different. Webull, the interval and the time frame, it just has it. So this is technically, what did I put? 1 minute? Yeah. This is all the data for the whole day of one minute. So if you were to count all these, you would literally count from 9:30 a.m. to 4 p.m. And then you can see how it. So the analogy is the closer you look in, you're like a microscope. But then the further you go out, you're using a telescope. So the closer you look in, you'll see a better story. However, you may not see the big picture. So it's kind of like you're so focused in on one little spot, you may not see the big picture. And that goes into what Philip Shaw was asking. He said, what interval do you guys like looking at? Well, if you're looking, so this is another trade thing that people do, and this isn't not saying it's advice, it's a lot of people do this. If you're looking to look for an entry point, let's just go with Palantir. People can set up a 5 minute, but now we're going to zoom out like a telescope. So I can look at 3 different charts at the same time, just a different time frame. So I could do 1 hour, and this will make more sense once I zoom in so you can see. And then I want to look at the day. So if I were to trade Palantir, so let's just say we're looking at a microscope level, okay? I would want to buy right here, right? Because I'm seeing, hey, it's going up, but then it's going down. It's all over the place. So as a trader perspective, you would want to buy down here, right around there. So between 8 and 9. But if you start to zoom outwards, we're now at the 1 hour mark. Look what happened. There was a giant wick that was down here. So if I got in down here, that's probably where this is. And then it starts to go up, but now it's just steady. However, if I look at the day, and I'm sorry, Dan and Connor, but it looks like, look, it's had red days for the last week. So if I'm looking at this, I may want to hold out because this could go further. However, right here, I'm seeing it's still, it's still red. But it was still opening and closing. So if these were all red, that means, there were sellers. And however, trading philosophy or trading sentiment, it would probably be because this is a correction from all the Wall Street bets attack. I don't know if Dan would agree with me or not, but but sorry, but I'm just looking at it. It shows that there was a giant intake right here. So, and then it's going down. So in regards to the question, when's a good time to look at it? I would say start with the day, look at the bigger picture. If you even want to go further, you can look at the week. So this is 3 years. So I did WK, which means the week. And this says 3 years, but Palantir only opened up. So you're only going to get up to September. So now
Palantir on the 1 year.
Well, it wouldn't matter because if I did the week for 1 year. It's only going to go.
I just meant the bigger time frame, just to see the chart better.
This is the whole. This is per week.
No, I just meant like making it the whole screen.
Oh.
I just want to say something about the trend line because it's always something you should keep in mind.
Okay, yeah, that's fine.
It's harder to see right here. Could you go to the day? So I just want to draw this real quick again. So this is what I look at, and hold up. Where did that go? There it is. Did that line pop up?
Yes, it did.
So I just look for the overall trends, and regardless of like how emotionally attached I am to this stock, like I just stick to these lines, and I'll wait till see if it gets close to that. So you could see the highs before Palantir broke out was around like 28. So I would expect it to come back to a little bit above that. So 30 to 31, something like that. Maybe in 28 back to where it was.
Yeah, I was going to go over trend lines probably the next, like talk about different, like now drawing on it because I think we're at 707.
Yeah, sure. Go ahead. You're good.
So with that, I'm gonna just with that. Are there any questions? And now we can do more questions and answers because this is just the super easy, just understanding the stuff. I want you guys to learn how to swim or learn how to crawl before you walk, before you run, before you do the Olympics.
You're doing great.
I know some of this stuff can be boring, but I just like to start it conservative. I know I do the riskiest trading, but I'm very, very conservative, which, it's kind of like a, whatever that word is called. I can't think of it right now, but so like what Philip was saying, he said, I feel like you need to start on the computer versus phone apps. That I would recommend a computer first because a computer can do a lot more things than what a lot of the phone apps can do. The only time I'll touch only time I'm doing something is if I'm already in a trade and I want to monitor it and then get out of something. Because I trade 24/6. So I can trade in the middle of the night because I do a different financial product. But with the phones like Robinhood, it just shows like a line and you can't see. So like lines are cool and stuff and it can show you the direction, but you want to see some of this data where these candle bars are or the candlesticks, because you can see this day, you're like, oh my gosh, what happened? And then you can then maybe you can type in Palantir, January 27th. Maybe a news article will pop up. So that's what's called doing your DD, your due diligence, or daily data. Made a joke, but you can see these giant things that can occur. So and this is just going into just basic chart reading. Uh-oh. And of course, my HDMI cord is going out. You can see right here, and again, I'm just throwing out examples just so you can see. You can see right here, there wasn't much movement with Palantir. So like what? This was roughly maybe what, 20, 26? So the range from this just traded between 20, what, 24-ish, $25 to roughly 27.50. So that can help you also to determine, hey, do I want to go into this stock? Because if there's not much movement going on for a while, unless you know that there's like news or something, then maybe you might want to look somewhere else where there could be more volatility. And again, this is just determining, what you want to go into. I can't spoon feed you and tell you go in and buy this, not by this I mean Palantir, but go in and buy this stock. But it's so you can understand, hey, I'm seeing this, there's little movement. Do I want to get in it? Do I want to get the dividends if they offer it? That could be another financial tool in your toolbox. So that in itself, hey, if this isn't moving very much, then I may be safe with my investment. I may know, hey, this won't go down or up very far. I'll still hold the stock. It could be like a savings account or an invest or checking or something. You know that the money's going to be there if you want to sell it. You may make a few bucks. You may lose a few bucks. It's up to you. And these are just different theories of when you're looking at charts. So like right here, like, oh man, there was a lot of volatility. However, if you looked at the news, you would know that Wall Street Bets was trying to pump up Palantir, BlackBerry, a lot of other stocks. Then you may say, hey, this may still be a good stock. So again, you just have to do some research.
Yeah, please don't put Palantir and the Wall Street Bets guys in the same sentence, okay? Two different things, okay?
Yeah.
Two different things.
So Josh asks, do you watch trends when market closes to predict or speculate your next play for the next day? Yes, I do. I'm really particular on trading stocks. I tend to trade stocks that are near earnings, or when news happens. That's how I do it. You can kind of feel an idea of where things are headed. A good thing to do in the morning to see where the market is at. You can do SPY, and SPY trades, from what I understand, now it trades 24. It starts market open on Monday and it trades 24 hours a day. So if you can even pull up your chart on SPY and maybe just do the 1 hour. So look what happened. So this is just going into chart reading. Okay, what happened this whole day? This is the 1 hour of SPY. This thing just rallied. So now again, we don't have a crystal ball, but if you bought in at any part of this time of day until the very end, you would still be making money. But look what happened after hours. So again, this shaded part is the after hours. It's still going up. So I have an indication that tomorrow the market's going to open green. However, there are other markets at play. We're going to be looking at FTSE 100, which we're looking at global markets now. But when you look after global markets start opening, this may fall, this may go up. We don't know. But in the morning, so if I were to look at the morning right here, and I see it starting to go up, that's an indication. Yeah. Now, would I have known this is going to go all the way up? No, because if I just looked at this stuff, this was looking kind of rough. Because it started here, it rallied, then it went down. But look, it rallied up here, then it went down, then it didn't know what it wanted to do. But then it finally went up, up, up. Now, people may ask, why aren't you putting in the SMA or studies or indicators, things like that? I just want you guys to get the idea of how to read just this, because then we can add stuff onto our charts to then use more advanced strategies. Jamie asks, bull trap. With trap trades, that can get really complex. I won't go into that today, but I can show you on another call, or you can just DM me and I can explain that. Because for me, I've done this for a long time, so I can see when trap trades are happening. But sometimes, I would say. But yeah. So yeah, we're at the 1 hour, 15-minute mark. I know a lot of you guys probably, it's a lot of information to take in. Like to learn how to trade in an hour and 15 minutes, that's hard. So that's why I wanted to go slow and just give you the ideas of how to read and how to execute the orders. The main highlights are just the candlestick, just if you can read the candlestick, and then also the trailing stops. So when I really like those two things.
Yep.
But if there are any other questions, comments, concerns, compliments, curiosities, you
Yeah,
can
feel
type
free
them.
to message us as well, or just post it in the group. If you have a question, somebody else has the question. And if you ask it in the group, you're going to help that person get it answered. Okay. So newsletter link is in the chat. If you're not signed up, that's a huge mistake. A lot of our time and effort goes into that. So please sign up for the newsletter. How do you know exactly why a stock is bullish or bearish? And the reason in price movement if there is no news released?
There's a lot of different things, but it's hard to find an example because I have to literally look through some stuff. Actually, I do have an example, but there is news released for this though, so it's kind of going against what the question is. But I would say, oh, come on, monitor. It's like this thing has been working for 5 years, and now all of a sudden it wants to not. So if you look right here, there was news of Piton's earnings, and look what happened. Hype, 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 hype. This is the 5-minute. Let me just get like a 15-minute one. Hype, hype, hype. Major sell, hype, hype, hype. So right here, this was hype. And this is within 15 minutes, there was a major sell-off. So this was showing a bullish trend. However, there was a sell. So then this gets into where, what's going on. And more people then got in on the selling. So, but then guess what? It started to rally again. So this right here, that would be considered what a trap trade is. Was it? I don't know. I mean, there's so many different things, but seeing this go up, it's just like with anything, when you make so much money, there are going to be people that want to take profit. So you have to determine, okay, did people take profit? Possibly. The volume's low. This is more advanced, but the volume was lower. So I would say this is probably a trap trade because they're not manipulating. They're just trying to say, hey, there's less people selling, but there was a major drop. But then more and more people got in. Then look what happened. Look at this candlestick right here. So their finances were released and was not good. I was going to short right up here-ish, but I didn't have the chance to.
You're in on Peloton right now, aren't you, or something? Did you do a call?
Oh, no. I was doing stocks. I should have went on a call in the morning, and then also Nokia. I forgot Nokia had earnings this morning, not this afternoon, and so I lost money on that, but that's okay.
Can I ask you a question about calls?
Yeah.
So is it bad to buy? So I have Kodak calls right now, $11 calls, and the price is around like $10.60 right now. Is that bad to have an option that's closer to in the money?
It's not bad. It just depends on the strike price, or I'm sorry, the expiration date.
So my expiration is next Friday. Wow. Oh, chart looks so. That spike yesterday just makes the chart look so weird. Like it was as if like that was like money coming in and shorts just taking advantage of the opportunity to just take it back down.
Well, this was the news of acquiring or being with part of Microsoft's news or whatnot of like doing stuff. So there was a major rally, but then people realized that it was the old news. They're just saying it again. So then it was just a major sell-off at the beginning after that. So that was that spike. But that's good information because you can say, what the heck happened here? So you could do your research and be like, oh, okay. Then you can make a decision. Do I want to hold these calls? Why did they say this information? Why are they trying to get people into buying? Things like that. Could that be a sign of trouble? I don't know. Could it be they want to get more people involved in it because they know the price is going to go up? Then the big guys that hold the big shares, they could sell off. That could be it too. It's just we don't know those things until it happens.
Can having a spike like that activate something in the algorithm? Like, could they have just posted that news because they want to get some sort of volume in the stock to somehow like affect an algorithm?
Yeah, totally. That stuff happens all the time. It's just you have to be careful. It's kind of what's the saying? Buy the hype, sell the news.
Buy the rumor, sell the news.
Yeah. So so that's what I would say. This is a pretty good example of what was occurring on that.
I agree.
So, but if you're closer in the money, I mean, you have theta decay, and that increases per day, getting closer to it.
So if you were in would it have been better to buy a $12 call than an $11 call at the levels right now? Or is that like good question? Like,
it's showing a trend going upwards, and this is what we'll learn next week or maybe tomorrow. I'm not sure. Well, I think I want to let everything cook for a little bit. So what Ryan's asking is he's asking for technical analysis, which we're going to get a lot more into. I showed you the chart basics, which that gets into the technical analysis. But for Ryan's question, it's looking like it's bullish right now, but we won't know until the morning.
But
so
my question was like, does it really matter if at the levels it's at now, does it really matter if you're trying to make money? Does it matter if you buy the $11 call or the $12 call?
Well, $12 call, you have to look at the break even after that. So it has to go 12 to that. Whereas with 11 to that, I would stick with the 11 if that's where you're at.
Okay. Thank you.
Yeah, no problem. Is there any other questions? Just with the trailing stops, limit order, spread? How many people did we lose? Or did we gain, I guess I would say.
We got up to 50, but there's 39.
Oh, perfect.
So is there any other questions that people want to ask? If not,
now we're it's after class, so you can ask me whatever you want. So if any of you guys
somebody said, can you quickly sum up trailing stop again?
Yeah.
Bye, Dan.
Okay, so with the trailing stop, so going back to this, if I were to buy Apple, let's just say I bought Apple at 137.2, but I'm going to change this now. I'm going to change this to 0.03 points. Where's this. So when you set the sell order, it's going to follow whatever Apple's at unless you set the limit for it. Let me show you on Street Smart Edge. So I'll show you my position. Again, I liquidated my stuff, so you're just going to see one stock in here. And that's IGC. So where's my thing? So you're going to see a lot of stuff because I do a lot of trading. But so this is how my trailing stop is right now. But what you do is if you click trailing stop, IGC, trailing stop, and I do the trail amount for 3, and it won't do it. But So you're saying buy IGC? No, that was Ryan's pick. Ryan did that. I followed the newsletter for that one. So if I did it to 3 points, what happens is it will set it at, so it'll immediately set the stop limit at 137.17 because it's 3 points. I'm sorry, 0.03 points. So in regards to how you set these up, look at how it's moving. So if this stock is $137, I mean, it's pretty, I would say you might want to set it for maybe $2 or $3 or 2 or 3 points. So that would mean $2 or $3. But because I pulled this picture, I couldn't make it smaller to show like a larger thing. So if Apple is now at 137.23, it will then move up. Oh, let's go with this. It'll go up. It'll follow it. So if this is right here, this will it's literally in the name. It will trail it. And then it just keeps going up. Just very, very basic on how that works. Anything else? I think we're good.
So just
Oh,
one more thing. So with IGC, it's like the same situation. I have $2 calls. So it's not bad to have calls that are, because I've been holding those for like a week or two. And they're technically like in the money because it's above my break even. Is that bad that I have the $2 calls versus moving it up to the 2.5 or 3?
Well, the further out you go out the money, then you have to think of what's the chances of it hitting within that time frame. So if I were to look at that stuff, I would look at the daily because that will give you a better picture of where it's going. So I'm looking at the 1 day and I'm seeing, so there was not much movement right here, but now it's starting to spike. And you can see the on the MACD, this is opened up. Volume is getting there, but today there was lower volume. So looking at on a technical analysis, there was a lot of buy for these 2 days. Then there was a huger swing on this, but there was a larger volume. Yeah, by like 7 million. So that means 7 million shares were bought or sold or exchanged, I guess.
Okay.
Now we had small volume and it's starting to go down. So what I'm thinking is this is setting up for a reversal because if I look at RSI, it's hitting the 70, but this could also be just to spook people to then sell and then people to buy back in. So, but then if you zoom out, you look at the bigger picture, it does look like it's going upwards. It just had 2 days that it was selling.
Okay, so assuming that it goes up, does it hurt to have the $2 call versus the 2.5?
No, they'll both gain. It just depends on how high up they go.
Okay.
So like if it hits 2.4, but it never passes 2.5, then the call will expire worthless. So you'll lose more decay on that. So you'll lose more theta compared to the further in the money it becomes, the less decay you'll have, and the higher the delta will be.
Okay. And I might be wrong on this, but is delta the amount the option goes up in price wise per
Yes.
dollar movement in the stock?
Yep, that's right.
Okay, so and the $2 call has a higher delta than the 2.5.
Yeah.
So that means that, and it makes sense because the $2 is more expensive than the 2.5, so it's all relative.
Right. Yeah, because
Yes.
because now that IGC has approached or is near the $2, that call is going to be worth more because it can go either way, but it's going to look at hey, it's at $2, like this call can be executed, so it's going to cost more for new people getting in.
Got it. That makes sense. Thank you so much, Chris.
Yeah, no problem. Intrinsic value. I'd have to look up what that means again. There's like literally with the stock market. I mean, you've got. I would say I'm like a family doctor. You know, you come to me for like your general stuff. Like I know a lot about a little bit, but when you talk about brain surgery, you find a specialist. Like there's just so many different things to learn about the market. Like working at Schwab, I had to use iWin a lot because it's called I Want It Now. I want information now. And it's like literally a dictionary and a financial desk reference. I'd have to look up what that means. So intrinsic value is figured. So yeah, it's a bunch of math stuff. Yeah, I guess I could Google it. And as that then drops. So Josh asked, why does the delta fluctuate up and down? Stock price. So there's so many different variables that are included. It can that could be because of the gamma, the rho, the zeta. There's a lot of different symbols that are involved. Generally, the closer an option will have or will be near the end or the expiration date, it's going to fluctuate a lot more, whether it goes a lot higher or a lot lower. Generally, it will exponentially decrease in value because the closer you get to the time of it of the end date, then it's going to be worth less because it's like saying with the sports bets, you kind of know where the price is going to go.
You trade futures, right?
Yeah, I trade futures and commodities.
Futures and commodities.
Yeah, which are, I mean, it's technically the same thing because it's a future product because you buy it at a certain date. But I do commodities and the index futures, I guess the better way to say it.
So my tip book here says, start with weekly price chart to establish the long-term trend. And then work down through the daily and hourly charts to trade in the direction of that trend. The odds are better if you're trading in the right direction of the long-term trend.
Yes. Yeah, that's perfect.
Do you like a good book? I like this one.
Yeah.
Trading Habits.
Yo, Chris, you should pull up Tilray. I want to show you guys something.
Jake, yes, this will be on the YouTube afterwards. That's why everyone should subscribe to the YouTube.
Okay, go to the 1 year, 1 day.
I'm going to answer some questions again. Okay, so Philip said say that again. Oh, probably what Connor's tip. And then Sam asks, should you sell before expiration date of option if in the money or let it go closer to see if it can go higher? Set a trailing stop. You can do that with options. Just when you deal with options, just do the points structure. So again, if you do $1 for the point, that means $100 on the option. So if the option is, let's just say it's, and I'll write an example so you can see. Okay, I'll do Webull. Oh, can I look at options? Yeah, I can. I remember now. So if you're looking at, this is Palantir. So see, this is 0.47 and why is that? 0.47, 0.43. Ask and bid are inversed. What? Oh, that's right. Okay. This is different. So you may want to put it, excuse me, at 0.2, just whatever. So when you set your trailing stops, that's what I would do for that, if that helps you, Sam. Or you can follow my rule, weak hands or green hands. I'd rather take a profit than lose it, because it could go down. I mean, things go up and down. People will take profit. Me, I'm safer. If I'm in the money and I have a good chunk of change and I'm happy with that, then I could sell it. Or if you have 2 of them, sell one, see where the other goes. If you have 10, maybe sell 5 or 6, 7. take that money and then see if it goes further? Oh yeah. And then, okay, so I'll answer Ryan's question first, and then Philip, I'll go to yours. Okay, so Tilray.
Okay, so I just wanted to add to the point about like looking at the long-term trend and how the long-term trend kind of like shows you the truth of what's going to happen. So see how the MACD looked like it was going to cross down right
Yes.
there. Yeah.
Yep.
It looked like it was going to cross over, like it was going to drop. So I looked at that and it was set up perfectly to drop, right? But then I looked at the 5-year 1 week. Look at the 5-year 1 week. Hold on. Go to settings real quick. The little gear thing, and go to price axis. I'm going to show you a little trick. Go to price axis and use log scale on display.
Okay, so just so you know, and this is a more advanced thing. A logarithmic scale will take data from it'll have more back end data compared to exponential. So if you do logarithmic, it's pulling most of the previous data to then calculate to the upward point. And then if you do exponential, it's more forward based. Just so you know. But yeah, no, I see how this works.
Can you zoom out a little bit?
Uh,
I can't wait. Sorry. Oh, there we go. So yeah, I was just looking at this and like it had that where is it, around $22 it had that Fibonacci.
Mhm.
And I was just looking like it's from its lows, like, and compared to where it was 2 years ago, it still had upside. So that's why on the 1 year 1 day, when I saw that it was about the MACD was about to cross over looking like it's bearish, the long-term trend is what helped me confirm that it wasn't bearish.
Well, because it touched on the RSI and it's still MACD is showing. So yeah, this could be more like a little spooky. And
Yeah, it's definitely a spook.
there was little volume on it. Because normally Tilray was trading at, well, this was right around the next year, so this was the talk about marijuana. But this was low volume, 116 million for this week, but then it increased by 40 million. Now it's doubled in volume.
Wow.
From this point, roughly doubled. So it's gaining momentum, meaning there's more people wanting to be involved in it. So whether it's a positive thing or a negative thing, whereas people want to sell it or people want to buy more because of the news, that's what this looks like.
Thank you, Chris.
Yep, no problem. And then if I even go back in, we can see there was a big spike right here.
Don't forget to change your price axis if you.
Yeah.
Just in case.
Cool. Mention anything about trading channels? Do you mean YouTube trading channels? Maybe. Oh, like a study. I mean, I could load. I mean, the MACD is what I was going to go over because that's but that's not really showing highs and lows. I don't know. I'd have to look at what study you're looking at. Are you talking about like RSI or? FSR channel? What is the FSR channel? Sorry, some of these I don't really know. Fisker. Oh, okay. Sorry, I didn't. Sorry, Paul. The stock. I didn't know. See, I don't know all this stuff. I have never heard that. So what's the question? I think you could probably stop recording now, Connor, because I think most of this Q&A is just like personal, or not personal, but just direct questions.